Welcome to the ChargePoint podcast, brought to you by FLEXECHARGE, your gateway to the future of EV charging. In each episode, we dive deep into the world of EV infrastructure, offering insights and perspectives from industry leaders, innovators, and the people at the forefront of deploying charging solutions and networks. Join us to explore the exciting developments that are accelerating our world towards sustainable mobility.
Welcome to the episode 54 of the ChargePoint podcast. I'm your host, Christophe, back from a nice and relaxing summer break. Hope you guys are also feeling great. Today, we're diving into one of the biggest questions in fast charging right now. Are batteries becoming a critical enabler for the next wave of EV infrastructure? For years, the industry has talked about charging mainly in terms of locations, uptime, utilization, and the number of chargers deployed. But as the market matures, the bottleneck is shifting. The real question is increasingly about energy. How much grid capacity is available, how much it costs, and whether CPOs or charging operators can actually deliver the charging power drivers and fleets expect. My guest today is Ryan Fisher from BloombergNEF, where he leads the charging infrastructure team. Ryan and his colleagues recently published a report looking at how cheaper batteries are helping EV charging scale. And by the way, FLEXECHARGE was happy to contribute data to that research. In this conversation, Ryan explains why co-located batteries are moving from niche pilots to serious infrastructure tools. We talk about peak demand charges, grid fees, truck charging, battery-backed megawatt charging, subsidies, China, Europe, and why some sites that were previously impossible to build may suddenly become viable with storage. We also connect this topic with BloombergNEF's latest EV Outlook, a report that is looking at what rising EV adoption, higher charging powers, and growing grid pressure mean for CPOs. One small production note before we start. At some point in the interview, you may hear a bit of heavy drilling in the background. Apparently, even BloombergNEF analysts are not immune to construction noise. Apologies for that, but the insights are worth it. Here is my conversation with Ryan Fisher from BloombergNEF. Let's get started. Hi, Ryan. Welcome to the ChargePoint podcast.
Hey, thanks for having me.
Thanks for taking the time in your busy schedule. So can you please introduce yourself for those who might not know you, your background briefly before we get started?
Yes, I'm Ryan Fisher. I work at BloombergNEF and I lead the charging infrastructure team. So BloombergNEF basically research around commodities, the energy transition and power markets and areas like that. And we're trying to connect what's happening with electrification of transport with the energy system. And hopefully we'll talk a bit about that today.
Fantastic. Yeah, I'm happy to have you in front of me virtually. I've been reading your newsletters and your articles for some years now, so I'm slightly starstruck.
I'm sure that's not true.
All right, let's get into it. So we talk about this new report, how cheap co-located batteries can help to deploy fast charging. So why this report? Why now?
Yeah, so obviously there's sort of an overcapacity in the battery market, and some of that has led to cheaper and cheaper energy storage, amongst other reasons. And at the same time, you've kind of got a lot of people trying to roll out charging infrastructure, and therefore we're just getting more and more questions about can batteries work? How do we deal with grid connections for charging? Is that going to stop the transition? So we, amongst other things, started writing this report to try and basically define, will battery storage be economical and why? And some of that is around grid fees and how they increase, and some of it is these flexibility markets. And I think we tracked something like 800 different projects where this is already happening today. So that was quite informative.
All right, yeah, absolutely. It is a hot topic, not only because we are working on this as a company, and we were happy to contribute to this report. And it was really interesting to see also get a global view, a global perspective on the type of actors and companies that are active in this space, in this particular fast-growing niche. So for years, for fast charging rollout was mostly discussed in terms of charger deployment, location, utilization, and uptime. I think we agree on that. And so are we really entering now a new phase? How do you see it, where the real bottleneck is energy infrastructure? So grid capacity, grid fees, power availability?
Yeah, I think there's certainly becoming more of a problem in different locations. Obviously, truck charging is a bigger load than we've seen on other sites, and perhaps in different locations. So that becomes a new consideration. And then with the kind of sites that you've got for the ordinary CPOs, they're trying to pump more power than they were before, both because maybe there's more EVs on the road and because the EVs are technically becoming more capable. BYD, these megawatt chargers, they're using battery storage to achieve those kind of rates and help out.
Yeah. And in terms of grid capacity, what have you learned looking across Europe? What's the situation from your perspective?
I feel slightly sorry for the CPOs and maybe even sorry for myself in terms of reviewing all of the different grid fees in different regions and how they differ and the different components of how they're made up. Fundamentally, each region is different and each country, and within each country, you see very different costs. So we did a kind of deep dive more so on the UK, and then we did sort of have a little look at other markets around Europe. And what you've got is a peak demand charge, an amount of money that you pay per kilowatt at peak times. And that seems to be rising in different locations. And then some markets, such as the UK, also have a fee that you would pay at peak times for the kilowatts that you consume, like a time of use kind of grid fee. Not every market has both, and the economics depend on both the size of them and whether you have both of them. When you look across the world, some of the governments or utilities, depending on how you want to define it, have decided we're going to remove the peak demand charge. We want to make the economics of charging good. So California, some of the utilities there, and then China. And they have almost got themselves the challenge of how do you reintroduce it? So they're allowing the business to scale up without these kind of punitive fees. But then at some point, they are going to have to add the peak demand charges back. So that does make me wonder how they're going to do it, because so far you've seen dates where they say, yeah, in 2025, we're going to bring it back. And it reaches 2025 and they go, okay, we'll need to put it out again because all these businesses are then going to go bust. One location where they sort of maybe bridged that gap was New York. And what they have is Con Edison has a tariff that changes depending on the utilization of the charging station. So at the start, it's got no peak demand fees. And as that is more utilized, then they kind of raise those fees for the user. So, yeah, it's interesting to watch how it's changed in different markets. Fundamentally, I think these seem to be getting bigger. Although we didn't come up with a conclusive metric, it does seem that way.
It's a vast topic. It would require several reports, and it can be quite a nightmare and a maze to navigate. And on the constraints themselves, is it something also your team looked into, like how much pressure is there on the grid? How little grid connection availability is there across Europe? Is that something also you looked into?
We didn't look at that ourselves. I mean, we have some reports that go into kind of these grid connection queues and how they vary in different markets. Mm-hmm. And we've done quite a lot of work recently on data centers, which is becoming like the hottest topic. Oh, yeah. Maybe from a personal standpoint, you've kind of got legislation saying, okay, we want to prioritize different grid connections for charging points or different areas. But if everything is a priority, then nothing is a priority. And maybe, yeah, and again, a personal view, but it does seem like then if you've got a lot of money, like data center connections, they somewhat seem to then be prioritized as well. So a big challenge for the grids just because of the amount of load and different industries that are growing.
Yeah, absolutely. Yeah, it's a hot potato. It's in Denmark also the new government just stepped in and taking a power and now have to deal with a huge queue and big prioritization discussion and how rational can it be? What's the rational? What makes sense, right? To prioritize first. That's going to be a huge headache for the politicians across Europe. So let's talk about, in the report, you looked at different ways co-located batteries can improve the charging business case. So where does the biggest value typically come from today? Avoiding or delaying grid upgrade? Is it reducing peak demand charges? What is it you saw in your report?
Yeah, I think each of those can work for operators, but they may only work for so long. So I'm avoiding a grid upgrade. I'm only having a couple of chargers. Then you find that the battery makes sense. I think in the longer term, this is the reduced peak demand charge. And then we start to see companies looking into this ancillary service revenues, but I don't think that it's a nascent market. Like Recharge in Norway, I think they're using their chargers and turning them down for frequency containment reserve. And I think they have 43 megawatts. So there are examples of people scaling up, but fundamentally it seems to start with peak demand charges and can I kind of upgrade the speed that I would get the connection by using these. I think the average storage that we saw was about half a megawatt hour per site to 1 megawatt hour per site, but there were certainly examples of like 20 megawatt hours, 10 megawatt hours, quite often related to trucks. And that's because you might have a couple of megawatt hours for a truck, but some of them now are 500 kilowatt hours to 800 kilowatt hour batteries per truck. So you quickly would lose any benefit really of that. So yeah, the bigger sites seem to be certainly going in there for trucks. In China, because they've got rid of the peak demand charge, there's sort of two things that are leading to this being economical. One of them is the low battery cost. There's a kind of like $150 per kilowatt hour on a pack level, maybe even lower. Whereas in Europe, we used an assumption of 300. Maybe that's a bit high, but that was what we used. So China doesn't have the peak demand charge, but they do have kind of varying electricity costs. And in some regions, that can be like 10, 15 cents. And then that starts to be economical if you can move maybe 20, 30% of your peak.
Right. Absolutely. Yeah. The so-called arbitrage is definitely what we hear is the first case that is makes the most sense. Yeah, ancillary are definitely more down the line. It's a future perspective. Yeah.
And have you got any ancillary services running on the projects that you're doing?
Well, we have actually, yes, some ancillary. Yeah, with for example, with Recharge, you just mentioned they have two sites live in Sweden, one in Malmö and then one west of Stockholm. So one in the south, one in the west of Stockholm, and on charging sites where the battery is connected and doing both arbitrage and can also participate to ancillary service. But it's really on pilot level. It's not scaling yet. And we know it's early days. It's very nascent, as you said. So for now, the most widespread is really to fill up with battery when it's cheap and, of course, boost when and sell kilowatt hours, right, at the best price later on in the peak times. So, but it will increase with that's definitely our expectation. Before we continue with the show, I have to tell you about something important. Co-located batteries are suddenly everywhere in the CPO conversation, but most operators still struggle with the first big hurdle, how to actually connect and control them. This is exactly what we recently unpacked in our masterclass. How to solve the connect challenge, how to unlock real value stacking with peak shaving arbitrage, flexibility revenues, DNO curtailment, with concrete example from Recharge, Q8, and other CPOs already doing it. So sign up for the on-demand masterclass. You really don't want to miss this one. And now, back to the show. So you mentioned the crazy cases, the 20 megawatt batteries. I was completely baffled when I was reading the report. The report highlights both the commercial vehicle depots, and then you have the high power charging for passenger cars. I mean, do you expect those co-located BESS to scale faster in one or the other of the segments, and why, if any of them?
So fundamentally, I think we're going to look back at these numbers, and BYD is just going to blow everybody else out the water. So they've gone out to 20,000 of these megawatt charging sites, and they've got about 400 kilowatt hours of BESS for each one. There's probably, my ratios might be slightly off in terms of, is it one charger, is it two connectors? But yeah, it's a high scale. So I think that will somewhat pull the average towards their 400 kilowatt hours of storage per site, just because of the scale of their total announcement. Certainly, the truck charging one is interesting because you end up with like large amounts of solar then become possible. You can get self-consumption of your own electricity. But I think this kind of middle ground is probably where it settles. Some of these kind of like half a meg to 2 megs maybe per site. But I'm hunching. Nobody quite knows. In New York, they've obviously got quite a lot of grid congestion issues, and there's a site going in, I think it's somewhere around 10 megawatt hours, but they're actually made up of these X-Charge chargers where the battery is integrated within the charger. Mm-hmm. And then they put them all together. I think it's for some kind of construction company or mm-hmm. distribution company.
Yeah. So, and maybe thinking unit economics, you were talking about cheaper batteries. So could maybe cheap batteries change where charging sites can be built? How do you see that?
Oh, 100%. If you can get the cheap batteries, because either the cost is coming down in the market as a whole, there's obviously more people coming, and therefore with scale, we as BNEF do loads of battery surveys and the price is coming down due to that learning rate. But in some cases as well, you can get the subsidies for this. So in the Netherlands, they have programs where you get subsidies to put chargers in, particularly now around their kind of rollout of commercial electric vehicles. They've got quite a lot of legislation there for that. You will get something like 80 euros per kilowatt hour for storage with the chargers. In the US, they've got rid of tax credits for charging infrastructure. I think it ends at the end of June, but the tax credits for battery storage still live on. In the UK, they've got this depot charging scheme. I'm pretty sure you can get battery storage with that. So even if the price of the batteries isn't going down, you may get a grant for them, which then also means that, I'll use the grants where I can get them, even if the economics didn't originally stack up. They may well after the grant.
Yeah, absolutely. Yeah. No, that's it's an interesting evolution where it's going beyond the usual tools that CPOs would reach out to, so to find spots for setting the best spots in terms of mobility and flows and of cars, right, and passengers, and now also think about where is the grid limitation? Maybe they couldn't do it before, but now with the batteries, they can definitely set up some sites even with a very little grid connection. So that's going to be really interesting, and I think in particular for the incumbents, the oil and gas CPO, so to speak, right, which have a great location, but very often suffer from very bad grid connection because, again, they were only powering the lights, right, in the gas station. Now they can really benefit from those amazing location by having batteries and become really super hubs, which wasn't possible some years ago.
And that was actually one of the hard things about the project, was figuring out what was the grid connection they had into the batteries. So quite often you could find the battery capacity, but you wouldn't know what the grid connection going in was. And I suppose coming back to your question a few questions ago about which one is going to be the most popular, well, actually, if you've got a site with, I imagine some of those petrol stations, maybe 50 kilowatt, something like that, then it becomes viable to have the batteries and enable you to have basically maybe 400 kilowatt charging.
Great. So switching to another very important publication that came out recently and which the industry is also waiting always eagerly for is the your EV outlook. So Bloomberg's NEF's 26 EV outlook, which gives a broader view of the EV market. And looking at the latest outlook, so what has changed most in your view that you'd like to highlight and share with the audience?
Yeah, so the outlook comes out each year. We get the privilege of aligning all of these different teams that we have: battery metal demand, electricity demand, the vehicle types. So we do trucks and buses and cars and other things. Some of the interesting areas this year on a global level, China sort of in the near term is slowing down. Obviously, the US has had big issues and we see slow there, but then you get quite a lot of growth in Europe and quite a lot of growth in these kind of like Southeast Asian countries. And they probably don't make up for the kind of slowdown on the market of China's size. But if you got rid of China and looked at the charts, it is really impressive. I mean, I think Europe was 30% up on EV sales last year. And the trajectory is looking pretty good, like huge amounts more models. So they were pretty interesting storylines to go through. And then trucks, I think we're seeing more trucks this year. Some markets done pretty well on the heavy-duty trucking. And then robo-taxis starts to become a bit of a story. Obviously, you started to see the fleets start growing. We're in the kind of low thousands maybe now. But when you think about this with millions, obviously a lot of people have questions as to what does this look like and where is the business opportunity for me. So we did a little bit of focus on that too.
All right. Was there any parts in the report about the expected pressure on the grid? Again, combining the forecast on the vehicle side and then the infrastructure, which probably can't keep up.
Yeah, so we looked at electricity demand on a kind of high level. You get something like 6% of global electricity demand by 2040 being from EVs, which is pretty small, but you have different markets where that is substantially different. The UK, where I am, is actually, I think, one of the highest. It ends up getting close to 20% of demand. And some of that is not so much to do with have you got a lot of electric vehicles, so much as have you got a lot of electricity demand from other sectors? So the UK is becoming more deindustrialized. We don't have electrification of heating. But I was in the Nordics this week, and we expect those markets, which are actually some of the fastest in Europe, still to be more like 10-15% of demand because they've got electrification of heating and quite high levels of demand in other areas. We then looked at the pressures on the grid. What you sort of see is actually, if you can split out demand investment for the grid into different portions, which we do, you get something like 14% of grid investment being from EVs at peak. So noticeable, one of the key drivers, but actually you've got a lot of grid upgrades due to aging grids. You've got a lot of upgrades due to basically the rises in general demand and growth of data centers and things like that. So it's one of many things going on. In terms of that cost, you have to think about it per user, and the challenge is that you're spending quite a lot of money now when there's not as many vehicles. When you think about it in 2040, 2050, the kind of cost per kilowatt hour is becoming quite small. So we looked at that. People are obviously bothered about paying the money right now.
Yeah. That's the problem. Yeah, it's a long-term game. It's heavy investment. Yeah, absolutely. It's daunting task, this electrification, to keep the pace, both at the same time. So if we connect the EV outlook with the battery storage report, what should CPOs take away? Does the 26 outlook suggest that the charging networks need to think less like pure infrastructure operators and more like distributed energy asset owners? Anything along those lines?
We focus more so on the ability to deliver the high powers. I think it becomes a key part of the report, and whether you need those high powers. When you think about the market today, whilst the automakers and the charging networks advertise powers of like 300 kilowatt, the average charging power might only be 70 kilowatt, maybe slightly higher depending on the network. And then BYD comes out and their megawatt charging is actually doing more than 400 kilowatt nearly all the time. So we already had this assumption in the forecast that average charging powers rise. I think we say about 200 kilowatt in 2040. And we did a scenario looking at, okay, well, what if that was 400 kilowatt? And fundamentally what that means is you need like half the number of chargers. If you double the average rate from 200 kilowatt to 400 kilowatt, you get rid of that network. So from a CPO basis, we sort of focus on competition and consolidation, and the competition coming from, is it the best site? Can it do the higher charging powers? But also, what's the price of electricity? So obviously the Iran war means there's big features in the report on the price of gasoline, the price of electricity, the types of locations you might buy that electricity. And you are starting to see the supermarkets come substantially under the average, for example. So a good charging site today that might be a good utilization and making money could be duped in the future and superseded, not only because of the technology and the location, but also because of the amenities and the other things that they've got and how they can cross-pollinate the business model.
Absolutely, yeah. They have an easier time to invest because they're making money on the people shopping at the same time as charging. So it's moving target. It's really not easy to navigate as a CPO. Yeah. So for a CPO or infrastructure owner, to wrap it up, so planning the next wave of fast charging sites, what is the one mistake they should avoid when thinking about co-located batteries?
Yeah, that's an interesting question because I didn't have it phrased like that in the report. What's the one mistake that the battery operators need to...
Or maybe a misunderstanding, a myth to bust.
I think when we started writing the report, you have an idea that this is interesting, but I speak to a lot of people in the industry, and actually I would say some of those conversations have come out with the idea that battery storage with charging is too expensive at this point in time. And then as you write the report, you say, actually, okay, there's not just pilots going on, there's other people. And I think in writing it, we also saw Instavolt in the UK come out and say, okay, we're going to put these on many of our sites, and it's starting to make sense. And at the same moment, I'm uncovering more of these grid fees and getting a bit more familiar with how they roll in the economics. So yes, it isn't going to work everywhere. There's certainly some places where you can have like 10-year plus paybacks. But I think it is going to be an enabler for quite a few sites. And it leads you to this idea that maybe whilst, again, we're in the nascent stages of ancillary service markets, if you did have storage everywhere, then you may well want to take advantage of that, and that it could be quite a big market.
Yeah. Personally, I would say you have to look into this really seriously. Don't rush over and come to quick conclusion that it's not now, it's too expensive, because you got to be ready and ready to act when it starts on the day it makes economical sense, and prepare for the future also with the tech stack, with pilots that can scale in the future. There's another interesting episode which we just released today, actually, episode 52, where you can hear about flexibility from a colleague from the industry, from Fortum, who's the head of flexibility services. So that's another episode for people who want to dive into this. Yes. All right. On that note, thank you very much, Ryan, for taking the time in your busy schedule, and a pleasure having you, and wishing you a great afternoon.
Yeah, thanks so much, Christophe.
Take care. And that was my conversation with Ryan from BloombergNEF. I think the big takeaway is clear. Co-located batteries are no longer just an experimental add-on for fast charging sites. They are becoming a serious infrastructure tool. What Ryan explained very clearly is that the economics are changing from both sides. On one side, battery prices are coming down, partly because of overcapacity in the battery market. On the other side, the pressure on charging sites is increasing. More EVs, higher charging powers, heavier loads from trucks, and in many markets, rising grid fees and peak demand charges. That combination changes the equation. A battery can help avoid or delay a grid upgrade. It can reduce peak demand costs. It can make a weak grid connection usable. And in some cases, it can even unlock locations that would otherwise be impossible or too slow to develop. The episode also showed that there is no single universal business case. The value depends heavily on the market, the tariff structure, the grid connection, the utilization of the site, and the type of vehicles being charged. Passenger car, fast charging, truck charging, depot charging, and megawatt charging will not all follow the same path. Another important point is that flexibility and ancillary services are promising, but still early. For most CPOs, the immediate case is likely to come first from grid cost reduction, power boosting, and a smarter use of electricity prices. Flexibility revenues may become an additional layer, but they should not always be the foundation of the business case from day one. But they are important for the future. And on that topic, we have other episodes that I invite you to check out. Looking ahead, I think this is where the market becomes really interesting. Charging networks will increasingly need to think like energy asset operators, not only infrastructure operators. The winning sites will not be just the ones with the best location or the most chargers. There will be the sites that can manage power intelligently, control batteries dynamically, optimize cost, and adapt to changing grid and market conditions. So the message is not that every charging site needs a battery tomorrow. The message is that every serious CPO should now understand where batteries fit into their rollout strategy, because cheap storage, constrained grids, and higher charging power are starting to reshape the economics of EV infrastructure. A big thank to you again, Ryan from BloombergNEF, for joining the podcast. Again, I'm a fan and always be a fan. And if you enjoyed this episode, please share it with a colleague who is working on EV charging, batteries, or energy infrastructure. It really helps us to reach more people in the industry. You can also support the podcast by leaving a review and giving us a nice 5-star review on your preferred podcast platform. Thanks for listening, and see you in the next episode.